It's time for Charting Futures, where we dive into the futures markets through the charts. Today, we're taking a look at how to play a potential trade war. Stocks are, of course, lower today, in part because President Trump is said to plan to impose $50 billion in China tariffs. This over intellectual property violations on Thursday, according to a person familiar with the matter. The president is expected to announce details on these possible actions today. Now, some of the president's criticism of China has been for hollowing the American manufacturing sector. The Dow, with its 24% weighting to industrial stocks, may be more sensitive to this possible action, and we see that today with the index lower, underperforming the other major averages, at this point down 1%. In fact, on the year, the Dow is lower at this point, too. We see this with this year-to-date chart down about 1.5%, 1.5%, and 8% below its all-time high. But do the technicals suggest more declines are ahead, or will there be a bullish reversal of the near-term bearish action? Let's hop into the Bloomberg to take a look at BTV2607, and we see this chart here with an uptrend of the Dow. But on the recent volatility, it does point to the possibility that if the Dow goes below, say, 2,400, this area of near-term congestion could break down to 2,200, even sub 20,000. So how do you trade that possibly or pretty bearish chart of the Dow E-mini futures? You could either sell the front month contract, and we see that's where the liquidity is here when we take a look at this contract table here in June, or Greg Calderon, Bloomberg options strategist, he says if you are bearish on the Dow, one way to play that view would be with less risk is to buy June puts or to do a put spread and buy June and sell September. And that's a look at how to play a potential trade war through the Dow 100 E-mini futures in Charting Futures.